Hi, Assalamualaikum. First of all, my name is Khadijah Akmar. Our group would like to present to you about the basis of Malaysia income tax system. So, what is taxation? Taxation is a sum of money demanded by government for its support or for specific facilities or services levied upon incomes, property and sales. So, next is objective of taxation. The primary of taxation is to raise revenue to meet huge public expenditure. Most government activity must be financed by taxation, but it is not the only goal. In other words, taxation policy has non-revenue objective. Truly speaking, in the modern world, taxation is used as instrument of economic policy.
Hi, my name is Siti Hajar Binti Azharuddin. So for my part, I would like to explain about scope of charge. According to Section 3 of the Income Tax Act 1967, tax is defined as the income tax that shall be charged for each year assessment upon the income of any person accruing in or derived from Malaysia or received in Malaysia from outside Malaysia.
There are two circumstances where income tax liability arises. First, the transaction must be income in nature and such income is accrued in or derived from Malaysia or it is received in Malaysia from outside Malaysia.
Next, let's look about the differences between Malaysian-derived income and foreign source income.
First is Malaysian derived income. Malaysian derived income will be taxed at the time of accrual or derived notwithstanding. Next, the income received is not relevant. Meanwhile, for foreign source income, will not be taxed in Malaysia until such foreign source income is received in Malaysia. The income also received in Malaysia.
Let's move to my next point, which is type of taxes. There are two types of taxes, which are direct taxes and indirect taxes. So let's look about the detail of each tax.
First is direct taxes. Direct taxes are the taxes that are directly paid to the government by the taxpayer. For example, income tax and corporation tax. Next, indirect taxes are taxes that can be passed on to another entity or individual. For example, sales tax and service tax.
Hello everyone, my name is Nurul Iman Binti Fuad. So, classes of income on which tax is chargeable. So, according to Section 4, subject to this Act, the income upon which tax is chargeable under this Act is income in respect of gain or profit from a business, gain or profit from unemployment, dividend, interest or discount, rent, royalty or premium, pension, annuity or other periodical payment not falling under any of the foregoing paragraph, gain or profit not falling under any of the foregoing paragraph.
So, however, there are special classes of income on which tax is chargeable. So, according to Section 4A, notwithstanding Section 4 and subject to this Act, the income of a person that is not resident in Malaysia for the basis year for year assessment in respect of amount paid in consideration of services rendered by the person or his employee in connection in with the use of property or rights belonging to or the installation or operation of any plant machinery or other apparatus purchases from such person. Next, amount paid in consideration of any advice given or assistance or services rendered in connection with the management or administration of any scientific, industrial or commercial undertaking, venture, project or scheme. Lastly, rent or other payments made under any agreement or arrangement for the use of any movable party.
So, I would like to talk about basis year, basis period and year of assessment. Basis year is the calendar year coinciding with the year of assessment. Basis period is the time period for which a sole trader or partnership pays tax each year. Year of assessment is the year of which the income tax is charged after calculation.
Last is chargeable person. Every person, whether resident or not resident in Malaysia, should be chargeable with tax in respect of chargeable gain occurring to him in that year on the disposal of any chargeable asset. Then, note that the tax resident status of domicile of a person is of no relevance in the real property gain tax regime. However, Malaysian citizenship of permanent resident status of Malaysia is of significance as the tax rates and eligibility for certain preferential treatment hinge on such status. So, what is the meaning of real property gain tax? Real property gain tax is form of capital gain tax that homeowner and businesses have to pay when disposing of their property in Malaysia. So that's all from us, and thank you.